Good morning. Welcome to Forex In Four. Today's Friday, November 25th, 2011. Back from Thanksgiving. I hope everybody had a happy holiday. I most certainly did. And we're turning our attentions back to the market now. If we're looking here at the 30-minute chart of Euro USD, Euro dollar, and you can see here that we've been slowly selling off here. All right, and looks like 134 is acting as resistance. We're pulling into 132, which, if you look at the chart of the day from Wednesday, they'll tell you exactly what we were expecting to happen. So what's gone on since then? Well, we've had a fresh downgrade in Portugal. All right, their credit rating and status has been downgraded to junk, essentially. So they've sort of been out of the limelight right now. Everyone's focusing on the Spanish banks and Italian government debt, and people forget that it was Portugal was probably the second country or third, I guess, with Ireland to jump into the mix. So they just got downgraded to junk. That's not a good thing. And then we had some confidence figures that came out this morning that came in worse than expected. Although, you have to figure who's going to have confidence right now with all that's going on in the Eurozone. So it's sort of a self-fulfilling number. But I just want to give you a recap of what happened yesterday, and then we'll go forward. There's not a ton of news on the docket today. It's actually all come out that we're going to see. U.S. stock market's open. It's a shortened session today. I think it's open for about 3 hours or so. So probably not going to be much activity going on today. But yesterday, we had some numbers in Germany that came out. German GDP came in as expected, 2.5% on the headline year-over-year number, the quarter-over-quarter 0.5% as expected. But a lot of other metrics came in. They were also better than expected. Their imports better, private consumption was better, government spending was higher, exports were higher, their business climate current assessment and IFO expectation numbers, those all came in better than expected. So, Germany is still chugging along, and they're not ready to give up just yet. So, things, when they start to look their worst, that's sometimes when, things can kind of turn around. So we're watching Euro pull back to 132 here. Just shift our attention to pound here real quick. They came out yesterday, and they had, in England, their GDP figures came in as expected, 0.5%. But a lot of the other metrics that came in were lower than expected. So things like exports were worse. What else? Private consumption was worse. The economy is definitely slowing there in the UK, and it's reflected here. And you can see that the pound's been on its way down. And we're looking at the 30-minute chart here. I hate how they do this new chart action, but let me look at the 2-hour, and I just want to break it down to, let's get there. So you can see pound's been pulling back from those highs earlier in the year, pulling right into about 154 area. So, we know about what's going on in the UK. We just saw the minutes from their meeting. All right, they've got a bias towards easing monetarily because of the slowing economy, and that's sort of what we're seeing now around the globe, is that we've got these slowing economies. I mean, there wasn't a ton of news here for Australia or anything like that, but, whoops, this is Euro Swissy. We can look at Australia, and you can see these charts all look the same. We're seeing dollar strength, okay, flight to safety. All right, people are averting risk. There's risk aversion, trade is on, and they're trying to get away from risky assets, including stocks, commodities, and commodity currencies. So money's moving towards the dollar right now because of the euro debt crisis, and people are still afraid of what's going to happen and how that's going to play out. And if we look at here, the only interesting pair to look at in this situation is dollar yen, and you can see, boom, we're still sitting in this range right here, just above 77. So not a whole heck of a lot going on there. So, today's going to be sort of a wash, not a whole ton going on, but next week's really what we want to look forward to. Hopefully markets are back from the holidays, and people are hoping to get back to work. Maybe we'll hear something from the Eurozone that they realize the gravity of the situation and that they're going to do something about it. I mean, right now the idea being floated is that we need to see some sort of Euro bond to really paper this over, and we're not hearing it yet. But if the market keeps pushing, then we just might hear it. So that's what I've got for today, gang. Shortened session here this Friday, and everybody enjoy the weekend. Good trading to all.